there's so many things that Donald Trump has done in the space of real estate. Who doesn't want to be like Donald?
Yeah, no one doesn't. No one doesn't. I mean, having all those real estates and all those tax, incentives and ways that he uses to avoid tax is very interesting.
How's it going? How's it going? It is I again, your boy, TJ, Taurai Jack, and I am here again with my boy. You know what day it is if we are here. It is.
How's it going? How's it going, TJ?
What's happening, man?
I'm all good. I'm all good. How are you?
Good, man. You know what day it is today, isn't it?
Yeah, it's a tax and properties and tax.
My man.
That's what we do.
That's what it's all about, right?
Yeah.
Ladies and gentlemen, if you've never been here before, we talk about property and we talk about property all the time and taxes. Lebo is a tax practitioner, but not only a tax practitioner, he is also a developer in his own right. This is a fascinating topic that we are always talking about. And there's so many loopholes in which we can be making money, losing money. Our idea of us having this conversation is that you are never caught with your pants down, but rather you can benefit from the tax benefits. Isn't that so, Lebo?
100%, TJ.
Awesome stuff. Right. Whilst we are at it today we wanted to focus on an interesting conversation. At the time of this recording, up from the first world countries, you know, they generally call us a third world country, right? I'm not so sure which one is the second world countries. The first world countries, right? In the States right now, there's lots of conversation around Trump. And I want to bring this conversation label of Trump because he is one of those guys that me and you and a lot of many property investors look up to because he started off when he was young. We all know that Trump's father used to own real estate. They used to collect. He has built the Trump Towers. There's so many things that Donald Trump has done in the space of real estate. Who doesn't want to be like Donald?
Yeah, no one doesn't. No one doesn't. I mean, having all those real estates and all those tax, incentives and ways that he uses to avoid tax is very interesting.
Oh, now you're saying Donald avoids tax.
I didn't say he evades tax. I said that he avoids tax. Everyone can do.
Tell us again, what's the difference between avoid and evade?
So avoiding tax avoidance, it's using, the benefits and the incentives that the government has allowed, it's tax deductibles that are allowed by the government within the tax law. And that is legally, you can deduct your expenses legally without breaking the law. And as a result, you save a bit of money on tax and you get back some of the tax incentives from the government. And tax evasion is when you are now breaking the law. You are now stealing from your partner, SARS. You are now taking what is due to SARS and using it for yourself. So that is tax evasion. Tax avoidance is what you within the law, the tax laws, you deduct what is allowed, and then you remain with the bigger portion of that, and then you give our partner SARS what is due to him. Right.
So Lebo, if we look at Donald Trump, right, and today I'd like us to make a comparison of Donald Trump because he's been in the news of paying no tax.
Yes.
Right? Like zero tax. Like he's got so many real estates. Like me and you put together and 10 of our other friends put together, we don't even come to a 10th of what he's got.
No, not even.
Right. But how does a guy like him pay no tax? I mean, that number one, okay, fine. The people might like say, "Ah, TJ, don't compare us to the Americans." But are our laws different or similar in any way that we can also evade tax or avoid tax?
I think it's all comes back to structures that we use to when we're setting up our portfolios and our income.
Right.
So with Donald Trump, he uses more of himself as a brand. He carries himself as a brand. So hence even the expenses that he incurs on himself, because he's a brand and he uses his brand to generate income. So the expenses relating to that income that is spent on himself, they can be tax deductible. So I think he has registered himself as an entity, his brand as an entity. Hence, his expenses in his personal capacity are also treated as an expense. So because I mean the tax deductible definition and our tax laws, they say any expense relating to generating the income, it can be tax deductible.
That is amazing because I think I read somewhere else where they were saying that Donald had written off, or should I say, him and his accountant, they had written off something to run about $70,000 in hairstyling. And I looked into a hairstyle, Brian. I'm like, yo, um, if Donald could write off 70,000 in a year for hairstyling, and it's seen as a business expense, right?
Yes.
And I'm like thinking from a South African perspective, how can I also have? I'm just looking like for a 12,000 rand, man. 12,000 rand, 1,000 rand a month. Maybe to do my hair. I'm not so sure how far I can get with 1,000 rand. But let's just talk about that expense alone, Nebo, in terms of how can you actually expense such an expense? There I am. I'm a property investor, and I need to look good to be presentable. We're always speaking about this, that
Yes.
when you're dealing with other people's monies, you need to be presentable. And from time and
100%.
time and again, you're looking fresh. And now Donald could easily claim 70,000 on his hair as a business expense in relation
Yeah.
to our markets. How does that work?
I think with us, remember we make our money on real estate, right? So we don't operate our business as a brand, from a brand perspective.
Right.
So therefore we are not, according to our tax law, we are not allowed to deduct our haircut or hairstyle expenses as a business expense,
Right.
because our main business, or our business, is not on the brand. We're not selling ourselves. We are
Right.
we are selling our accommodation to people. We are building, we are developing properties to rent out to individuals. That's how we get our revenue. But if our sales were generated from our brand, then that means our brand can be registered as an entity. And when we generate income from the brand itself, then the expenses that are relating to generating income on the brand level, then they can be deducted. But in this case, me and you, TJ, we don't sell our brand. We don't sell ourselves to. That's not how we make our money. We make our money by providing accommodation to people. That's how we generate our income. So the expenses that we can deduct in our case, it only has to be in relation to what we do, how we generate our income.
Okay. Let's
Yeah.
zoom in a little bit deeper into that, because
Yeah.
if there's other people that can pay zero tax, label, I think we speak of Trump, he's not the only one. I mean, he's like an icon to us because he also plays in the real estate before he went into the political space. So,
Yes.
you know, both you and I, we look up to him amongst other icons in the real estate
Yes.
space. And from time to time, we are fascinated with the way that he manages his taxes. But he's not the only one here who pays no tax, you know, from
No, he isn't.
people around the world. Like,
It isn't. You look at, for instance, what is recorded by Forbes as the richest man in the world, Jeff Bezos. In the previous in the recent tax period, he paid zero tax, zero.
what?
On top of the billions that he is making, and his 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 net worth is continuously rising, but in the previous tax year he paid zero, nothing, zero in terms of tax. So there are ways within the tax law that can allow you to pay zero tax. So
Now, with that label, I think it boils down to the same thing, right? The avoidance part and the evasion part, right?
yes,
And these are the two words that we need not to confuse, but need to know very well. So
yes,
tax avoidance is the legal route, right?
yes,
I get it now. I'm getting there. It takes me a couple of weeks to get there, but I'm there now, right?
yeah.
Evasion is the illegal part.
Yes, 100%.
And tax avoidance and evasion, it's worldwide. The foundations of it is the same,
Yes.
but the recipe now changes from one country to the next. Is that correct?
Yes, 100%.
Okay. Now, having said that, Lebo, I think the next question that I want to speak to is that we are in the real estate space. Well, Jeff, I'm not so sure. I haven't really dug in a lot into him. I know he's big into building stuff over the internet. I don't know if there is anyone who's never used Amazon. I've used it a couple of times. Some of my products, I mean, my book is on Amazon. But if we are to speak to the avoidance, I don't want to say the strategy, but if you are wanting to live on the lane of the tax avoidance, to me, it almost sounds like there are certain things that you need to be doing intentionally.
Yes,
And
100%.
not by mistake. Oh, sorry. I need to avoid this now because
Yeah.
now that's now evasion, right?
Yes.
What are some of those things, Lebo, that we can implement in the real estate space for us to benefit from tax avoidance so that we can pay zero tax? I want to pay zero.
So just to mention a couple of things that are tax deductible in, just in an overview of what you can use as a tax deductible in order for you to avoid paying a lot of tax intentionally. You need to obviously account
but again,
for.
I also want to stress out here, Lebo, but to say
Yes.
that when you're saying intentionally, it is pre-prescribed already, isn't it?
Yes, 100%.
We can kind of like follow the prescription of what is there already and now make it intentional in our space, isn't it?
100%. So you just for instance, you consult with your tax practitioner. You say, look, let's look at a best possible tax structure within my business, within the business model, how we can maximize on profit and yet at the same time minimize on paying tax as much as possible, right? So for instance, on your day-to-day business expenses, you're looking at the material costs and the equipment costs that you pay. So that is tax deductible. The employee cost and administration cost that you are paying to your employees and your administrators, then that is 100% tax deductible. So
No. So here's the thing, Lebo, right?
Yes.
We're always seeing employing someone as an expense. It's expensive to employ someone, right?
Yes.
But you are saying that it can actually work in your favor from a tax deductible perspective.
Yes, 100%. So remember, as a company, you are taxed at net profit,
100%.
not at gross.
Right.
So if you are making R1 million, and then you pay your employees 300,000, and you pay all these other things, and then your net profit gets to 100,000. That means you are only going to be taxed at net profit, which is the 100,000, as opposed to R1 million. So if you want to do everything yourself and you avoid employing people, then the 300,000 is going to be added into your net profit. Then as a result, you've done all the work, but your tax is now on 400,000 as opposed to 100,000. But you've done all the work yourself, or else you could have released yourself, freed your time so that you can do other things and focus on expansion and increasing your R1 million probably to R2 million, and still pay that 300,000. But your net profit, it increases. You are taxed on the net profit. Then you get a bigger net profit after tax, as opposed to the smaller one.
I think the challenge there, Lebo, in my view, is that especially when you're starting off in your 2 to 3 years,
Yes.
and that you look at that as an expense, right?
Yes.
Because obviously there is an expense maybe in the negative part. You are employing someone, and my wife could be doing that, and we could be saving, right? Or I could bend the candle, and I could be doing that accounting. I could be doing that website on my own. I could be doing what else? What else do young entrepreneurs do on themselves? I know website is one of them. Admin. Yes, yes. I'll do my own admin. I'll do my own books.
Yes.
Right.
Yeah.
So what you're basically saying is that you're shooting yourself in the foot.
100%. 100%. Remember, now when we're talking in the business level, we're looking at, if you are doing everything yourself, that means you've tied all of your time into your operations. So you don't have time to think about expansion. You don't have time to think about, scaling, and you can't scale your business alone. You need people. When you're talking scaling, you're now talking people. It takes people to grow your business, to grow your entity, to grow your revenue as well. Yes, you can get to doing R1 million, R2 million, R3 million alone. That you can do. But if you want to do 100 million, R1 billion going up, then you can't do that alone. You need to be employing people. You need to be able to manage people. You need to be able to work with people in order for your organization to grow and to make more money. Because the aim of the business is to make money and to serve your customers better. But if you are alone, you can be able to serve 100 customers. But if it gets to 1,000 customers, now it becomes a nightmare. You only have 24 hours in a day. You can only do so much alone. But if you employ other people, then I think we need to look at it in a sense that when you employ someone else, then that means that person is going to help you to increase your revenue. Then as a result, your business is growing. So yes, you're paying that person 30,000 Rand a month. But if that person helps you to make 100,000 Rand a month, then you look at it on the benefit side of the 70,000 difference that he has brought into the business, as opposed to the 30,000 Rand that he's taking out of the business, of which you can always go back and deduct as a tax deductible in terms of your income tax submissions.
Let's go on to the other ones, Lebo. So we're talking about today the items from a South African perspective that can allow you to pay zero tax. I know we all want to pay zero tax, but this does not apply to you as the employee.
No, it doesn't.
Because your employer has already sent your money to ZAS.
Yes.
Before they paid you, right? And
100%.
and here what we're talking about is actually entrepreneurs, businesses that are now operating. And with that, what are some of those tax avoidance strategies, or should I say plans, that are there already that you can implement, but you can't implement on your own? You need to have a tax practitioner on your side. You need to have an accountant on your side that you can already start looking into your business. For us, for me and Lebo, we are in the real estate space, so we're always exchanging notes on these things. But if you are side hustling on real estate and Bitcoin and I don't know what other things that you do, Tupperware, then you need to look into those kind of businesses, like what are the tax avoidances that you can do. But today,
Yes.
we're just covering the tax avoidance from a real estate, and Lebo is sharing with us some of the things that you can do.
Yeah, and another thing that you need to look at in terms of employee cost. So the cost to company, normally it's called the salary that you pay to your employees. It's called a cost to company,
Right.
of which when you calculate it from the business perspective, if you pay your employee 30,000, that is inclusive of tax. Yes, and their bank account, you're going to pay them 30,000 minus tax, and then the tax you're paying it to SARS as pay as you earn, and then you pay them the balance, of which is around 24,000, right? Depending on the other benefits that you have for them. So if the cost to company is 30,000, from the business perspective, you're going to tax deduct 30,000 as a whole.
Right.
Yeah, so not the one that you're paying to your employee. So it's the tax as a whole, of which is 30,000. Tax expense as a whole as a 30,000, and you deduct that, you pay that to SARS. And other items can be your business or office rental costs, that you can 100% deduct that as a business. The office supplies, be it your coffee, your sugar, your milk, you can your paper, your printing, your ink.
Is this why, Lebo, you go to some offices, right? Listen, Lebo, listen, Lebo. So at home, people are having recough, but at the office, I won't mention whatever coffee it is, but could this be the reason?
Most likely. We don't know.
We can afford it. Like when we're at the office, we don't drink tap water. No.
No. You drink your cappuccinos and your lattes and
Yeah. Bottled water, the wax, because we need to expense these things.
You even have that cappuccino machine, the big one.
Yeah. Could this be the reason?
Yes, I think also, I mean, you need comfortable office space where you can, or with all your employees, you can have a conducive environment to work from, with everything that they need in order for them to carry out, the business activities as efficiently and effectively as possible.
Yeah.
So that's why we have these offices and office supplies that we need to spend on. But the good thing is it's tax, all of it, it's tax deductible to SARS. Your phone costs, when you're calling your clients, when you're calling your suppliers, when you're calling, so everyone that you're calling, your phone costs, all of the phone costs, costs that you incur as a business, it's tax deductible. Your travel and your transport, including business vehicle costs, they are also tax deductible. If you and I, we are in the development space, if you have contractors that you're buying uniform for, or if your staff is wearing uniform, you can also deduct that tax tax costs. Wholesale purchases, the cost of, if you are in a business of buying and selling. So cost of sale, meaning your cost of those goods. If you're buying something for 50 rands and you're selling it at 100 rands, so 50 rand is tax deductible. The financial charges, that is your bank charges, your banking fees, your utilities, they are also tax deductible. We from time to time we deal with lawyers, attorneys, your transfer costs, your legal fees for contracts, and if you go into court, all those legal costs, you can also deduct them. From time to time, you and I, we advertise for our rental spaces. So your marketing, advertising, and promotion costs, they are also tax deductible, right?
Hold on,
So,
I want to throw in a curveball there.
Yes.
Right. So my 12-year-old son, he's handsome, like.
Yes.
I always see people saying that they've got a shotgun because they've got a daughter and things like that. For me, the bazooka for the girls out there, right?
Yeah.
And my little daughter, she's beautiful, right? I
Yes.
just made it right. You know what I mean?
Yeah.
The looks
Yeah.
is not
Yeah.
from me; it's from the mom. For me, it's just that. Now,
Yeah.
you speak of advertising, and I've had this argument before with someone, and we have said within the deductibles, if I use my kids in my business, right?
Mm-hmm. Yes.
And my kids are on my brochures, and we use an advertising agents, and they get paid wherever they get paid from that agency. It's an expense, right? But
Yes, it is.
but if I don't have an agency, can I pay my kids? Right? Can I pay my kids for the work that they have done? Does our law allow for that?
I think then we need to look at the labor law. There we look at the labor law, but I think if the labor law permits for them to be used as to advertise, like
Sure.
the likes of your Pampers and the other agencies that use kids to advertise, if they are used to advertise, and that is you can treat that as an expense and you pay them directly, to if they have a child account that you have opened, or someone, if you're paying them to your account, you need to account for that, or if you pay to their mother's account, yeah, so they need to account for that. Yeah, you can treat
But
that.
why are you avoiding to say I can pay myself? These are my kids, right? I'm the father.
But if you
Where is
pay
the mother
yourself,
getting involved here? This is my deal with the kids.
but if you're paying yourself, not your kids, then it increases your tax income, your income. Then your tax income, it also increases because it's now added into your income.
Right.
As opposed to them.
Okay, awesome stuff. I think what we've been talking about here, there's quite a lot in terms of how you can avoid and tax and utilizing the tax avoidance. And I think this is the key here: tax avoidance, tax avoidance, tax avoidance. And Lebo, I would like us to close by talking about what are the baby steps that you need to take to make sure that you are on top of your avoidance. Because we've been talking here, giving examples from Trump and all the rich people that we know, all the way to the richest men in the world currently, right? Well, known to Forbes. Maybe there's others that are not known to Forbes, who knows? But we bring it down to South Africa in terms of our everyday life. And the question there, Lebo, that I want us to talk about is, for me, the most key critical thing that you mentioned to me is, TJ, it's all about intentional, because all of these things are prescribed already. So SARS has given us a guideline. Poof. But now it is up to us to follow within those guidelines so that we can avoid paying tax. utilizing
100%.
the tax avoidance, which is legal.
Yes.
Therefore, my question to you in closing is, what are my baby steps to ensure that I can pay no tax or as little tax?
I think, like I've always said on all of our videos, is that the first thing first that you need to do intentionally, you need to, when you're starting out, at least go at least do one consultation with a tax practitioner.
Right.
But that consultation fee, it will be worth it because it will save you thousands or if not millions of rands in terms of tax, right? So if you do a consultation with your tax practitioner, they'll give you a tax structure that you can use for your company that is suitable for your company, because I don't think anything in this world is a size one fit all. So they can tailor make a structure that will fit your organization, your tax needs, your tax strategy. They can give you a tax strategy that you can implement that will be of a benefit to you. So that's the first thing first that I would recommend that people do. Consult the relevant people that have the relevant knowledge and the expertise to guide you accordingly in order for you to maximize on your tax benefit. Because I mean, tax, it was implemented, or it came into law for our benefit as opposed to not our benefit, right? So SARS, as much as they need to collect income in order for the country to be ran, at the same time, they also want to help us grow financially.
Right, right.
Yeah, so in order for you to benefit and to maximize on that, seek the relevant expertise. I mean, I am a business accountant by profession. I have an honors in taxation, but I still consult with tax practitioners. I still have a CA in my team that I consult with. I still have a business accountant that I'm working closely with as well to be able to grow my entity. Because I mean, I might have the knowledge, but because now I am not actively practicing, but they are actively practicing. They know better than I do, and they most probably are smarter than I am, right? So we hire smart people to tell us what to do, not the other way around. We don't hire them to tell them what to do.
Awesome stuff. You might as well do it yourself.
Yeah, I mean,
Yeah. Lebo, it's been a great hangout with you today, and I'm excited of the fact that we've now spoken about how one can actually pay no tax. It is possible. You just need to know the how part of it. However, one of my great mentors, Robert Kiyosaki, speaks of 3 or 4 quadrants, and there are certain things that does not apply to other quadrants. And the one quadrant is the employee, right? What we were talking about today, as an employee, it cannot apply to you. So if you're an employee and an entrepreneur at the same time, you need to know that from a tax perspective, you live 2 different types of worlds, right? Am I still an employee? Sort of, because like when I'm writing my book, I'm an employee, right? When I am doing property investment in my property business, for that moment, I'm an employee, all right? So I still earn money as an employee, right? But the assets that I'm building, the assets, I'm an investor. So that's another different quadrant.
Yes.
And the tax laws are different, right, Lebo? From an
100%. Yes.
From an employee 100%. And then now to an investor.
Yes.
But in the same breath, I also have a business, right?
Yes.
And there is tax laws for a business.
100%.
Right. So in other words, I am playing in 3 quadrants: the employee, the business, and the investor, right?
Yes.
100%. And I am benefiting for all 3, and I can also not benefit or be on the wrong side for all 3, possibly.
100%. Yes.
Right.
Yes.
And I have refused to be a small business owner, because a small business owner is that guy where if you ever stop working,
You don't have income.
You don't have the income, right? So Lebo and I, we are in the game of buying assets. Those assets can pay us for the rest of our lives. Some of those assets starts paying us R1 today. By the time we are now into 5-10 years later, they're paying us 10-20 rands. But for the rest of our lives, these assets are there for us and for our kids.
Yeah.
And what was that term again, Lebo? Your kids cannot inherit your
job.
Your job, ne?
Yes, now you can't.
But they can inherit the assets that you've got. You want to close off for us, Lebo?
I think in closing, what I just want to emphasize is seek knowledge, hire the right people, and implement. Don't be a information junkie. Yes, consume information, but act on it. Act on it all the time. All right, guys. Thank you for watching until the end. We'll catch you in another one. Thanks. Cheers.